Hey guys, in this video I'm going to show you how I made $1,000 today trading ZM. But first off, I want to express that this video is likely going to help you with your technical analysis. So pause it now and plan to take some notes if you're watching this to learn. First off, let's go ahead and verify those profits. 2793 is my account number. $1,095 on the day. I'm trading weekly option call contracts on ticker ZM. So this is posted in my Discord server right here at 7:25 a.m. Just showing you that so you know that it's real profits. These aren't paper trading profits. You know, I'm making this real time. All right, so ticker ZM. We're gonna break this trade down for you, but first we have to go to the daily chart time frame to show you why the trade was even relevant. So moving back to the daily chart. It had this massive gap up after earnings, right? So that gap you can see is, it's just, there's no price action here. That is what a gap is. So when a stock trades back into the gap area, oftentimes the either side of the gap area will act as a support and resistance. Do you see where that resistance held true? And do you see most recently, again, where that resistance held true? Okay, so it almost filled the gap. Because there's no price action here, the stock likes to make an attempt to try to fill the gap, so it got pretty close here. But what we saw happen, and why this was on the radar today for the watch list, was we saw this doji candle form at the bottom of a downtrend. So this is a reversal candlestick. I recommend that you look it up. If you don't know what I'm talking about, it's spelled D-O-J-I. So we have this doji candlestick formed at the bottom of a downtrend, close to the bottom side of the gap where we know support is likely. And then if we draw a downward trend line across the tops of these candles, we see that we have a break of this downward trend line. That's indicating that the trend is likely reversing. So we have a green candlestick then forming after a doji over the downtrend, and that's telling you that a continuation is likely, right? So we have a possible trend change. Okay, that's going to be it for the background of this trade. Now we need to move into the 5-minute chart time frame and get into the intricacies of it. So yesterday, this is a bullish formation setting up. It almost looks like an ascending triangle where you have a single flat top level of resistance and then a series of higher lows being pushed up to that point. So I was expecting a gap up this morning, and that is kind of what we got, right? So it pushed up after hours, kind of fell back down, and then pushed up again. Yesterday it closed right around 390, and today it opened up right at around 400. All right, so here's the deal, guys. 400 is a whole number. Okay, 400, 500, 600, all of these numbers are whole numbers, and they usually will act as natural areas of support and resistance within the market. So understanding that the level 400 is right here, and that is pretty much where we opened up at, I'm going to draw a trend line at the 400 level. Okay, so we have a break of this, or excuse me, we have a downward rejection, right, of 400 at open. So 5, 10, 15, 20 minutes into the session, we're on the 5-minute chart time frame. We're just trending down below 400. It isn't until this candle right here that we get a break of the 400 whole number, right, and a new high of day, and a break of the pre-market high. So all of those levels are significant. We're breaking the high of day here, we're breaking the pre-market high here, and we're breaking the 400 whole number right here. And what's even more significant about this candle is that look at the volume. It's occurring on large volume. So volume, guys, will always confirm the move for you, okay? When this pushed up past 400, it started to do this consolidation thing. So I put this in the alert room here. We're going to look at the timestamp. 6:56 a.m. I'm long on Zoom on this dip. My stop loss is going to be a break below 400. Looking for high of day. Be careful with the volatility. Okay, that was 6:56. So let's move to the 1-minute chart time frame and check out where that dip was occurring at exactly. All right, so it's likely that I saw this push up. I took my entry on this dip right here, and I was looking for the high of day move. All right, so when I took my entry here, the reason why I took the entry there, I know this is at 6:55, and the message didn't go out until 6:56. It was, you know, probably just a few seconds difference. The reason why I took my entry here is because I want to enter as close to 400. I want to enter as close to this whole number as possible, understanding that it was a previous resistance, and we know that old resistance is likely to become what? New support. I want to enter here as close to 400 as possible, because what that gives me is a low risk play, right? Then I can take my stop loss and place my stop loss just below 400. Let's say I place my stop loss at 399. So it gives me that low risk play with the potential for a high reward to the top side. Understanding that on the daily chart time frame, right where we drew that top gap level of resistance, right at or around 409, we knew that we had potential to possibly run up and test 409. So we're basically risking $1 down to the bottom side, so $3.99 for $9 up to the top side, up to 409. It didn't quite get to that price point, but that's all right. That was our risk to reward ratio. So we have a great entry with a great risk to reward. I will take this trade 10 times out of 10. Okay, so there's the volume confirming the move, the consolidation occurring here. If we go back to the 1 minute chart time frame, you see this did pull back right here to 400, but not one of these candles closed below 400. So not on the 1 minute chart time frame, none of these candles closed below. On the 5 minute chart time frame, it looked even better because you have these wicks being pushed up. So I watched charts I watched two different time frames at the same time. That means the 1 minute chart time frame I'm watching simultaneously with the 5 minute chart time frame. The 1 minute chart time frame serves to tell me what's going on during this consolidation exactly. So that's going to be like, we had like a little bull pennant here that failed, but then 400 was holding. These candles are still holding above 400, right? It's just giving you more details as to what's actually going on during this consolidation phase that you see in the 5 minute chart time frame. So watching the 5 minute chart time frame, I was never worried about my position in this trade because every time it came down to 400, do you see these wicks being bought up? That's telling you that buyers are stepping in at this level and pushing the price higher. So now that we have all of that out of the way, right? That's the reasoning why I stayed in this trade. We eventually got another volume push here with a new break of high of day, and then another volume push up to the high of day again. So at 723, I said that's high of day and 20%. You can take profit or hold. This has room to 408 or 409, but always take profits when offered, especially in the current market that we're in right now. I scaled some off there. I meant to scale some off. I actually accidentally sold the entire position, so that's fine. I was able to take that trade. Let's see, the 723 is where I sold. So we're going to go to the 1 minute chart time frame. 722, 723. Okay, so this is what I saw. A bunch of these wicks being pushed down right here. And then once we got this new pop up, and I thought we made a new high of day here, but then I saw this hammer candle form. I didn't think that we were going to be able to break this resistance level right here at 407. So that's why I wanted to scale some off. I just accidentally sold the entire position, so we didn't miss much here to the top side. We missed about $1 of profit there, but that's all right. As retail traders, we are never here to catch the entirety of the moves, guys. We only want to catch a little slice of the pie on the way up. It's very rare that you'll get a perfect entry and a perfect exit from bottom to top, right? You only care about even catching like a portion of these moves. In and out, snipers, that's how we trade. So that's it, guys. That is my full breakdown on ticker ZM. It was great. I called this in chat. Actually, Nicole was able to make $470 off this trade as well. And if this video, guys, has helped you out, please like and subscribe if you haven't done so already. I know that this stuff helps you with technical analysis. Thank you for your time. Thanks for watching the video, and I'll see you guys all in chat.